What if I told you that starting January 20th, credit card interest rates would be capped at 10% for 1 year? Would that help you? Would it actually happen? Or is this just political talk? Today, we're breaking it all down. We're going to talk about when President Trump announced this, whether it's actually legally possible, and then the potential pros and cons and how much it may save people. Let's get into it. Okay, so here's the source. Trump didn't actually say he's doing it. He said he's calling for a 10% cap starting January 20th. So calling for is not a legal order or an executive order, which we'll talk about the implications of later in the video. Anyone can call for anything, okay? So basically, this was the tweet on Truth Social. He basically said, effective January 20th, 2026, I, as President of the United States, am calling for a 1-year cap on credit card interest rates of 10%. Coincidentally, the January 20th date will coincide with the 1-year anniversary of the historic and very successful... This guy's awesome. Why is everyone so old? Why are all our politicians 800 years old? So here's the actual situation. So according to Reuters, Trump repeated a campaign promise, and he wants a 1-year 10% cap on credit card interest rates, okay? So we established that with the last tweet, but he didn't outline how it would be enforced. So critics are saying it would require Congress to pass a law for it to be legal. So I double-checked and triple-checked. I'm not a lawyer, but I used ChatGPT. I used a bunch of different resources, and it all keeps coming back down to Congress from what I discovered. If you're a lawyer or if I'm wrong about this, please let me know down below. But basically, Elizabeth Warren was saying that Trump's call was meaningless without a bill being passed by Congress. So why does this matter? So Americans are in a record $1.23 trillion in credit card debt, and roughly half of cardholders carry a balance. So this is from the New York Fed. You can see right here, if I zoom in, credit cards make up $1.23 trillion of all this outstanding debt, which is basically $5.1 trillion at the time of this recording. This is Q3 of 2025 that this data is coming from. You can see student loans are $1.65 trillion. Other is $0.5 trillion. Credit cards are $1.23 trillion, and auto loans are $1.66. And the reason I left this down here is because you can see credit card balances rose by $24 billion during the third quarter, now totaling $1.23 trillion. Okay, so check out this chart right here. Now, with all this being said, this means that they're paying interest on all this. Okay, I'm sure not all of this $1.23 trillion is on 0% balance loans, right? So they have to pay interest. With average APRs over 20%, that is a huge cost. So that cost is huge, but the savings would be huge as well if this 10% cap were implemented. So Vanderbilt did a study, of which I have pulled up right here. You can see that in the blue highlighted area, they're saying a 10% cap would save much more, a massive $100 billion per year if that 10% cap was implemented. However, to maintain profitability of customers with FICO scores below 760, banks would likely need to reduce rewards to those customers by as much as $27 billion. So you can read all this other stuff here, but I do want to zoom into this chart because it makes everything pretty easy to understand. Based on this Vanderbilt study, if they capped it at 18%, there would be $16 billion in annual interest savings with no reduction in annual rewards. And then also, you can see the average monthly interest savings per person would be about $361 based on their statistics. 15% would be $48 billion with $563 per month saved. And then if we went with the 10% APR, which President Trump is proposing, you can see the annual interest savings is about, everything that I read was about $100 billion to $150 billion per year. However, the only caveat with the 10% is that annual rewards reduction would be about $27 billion below a FICO score of 760. But this would save people about $900 per month. So I don't know about you, unless you run a big business or you have a ridiculous spending problem with, a lot of credit card balances and limits, no one is making $900 a month off rewards. Okay, you would have to spend a ton of money to do that. So I think that this is pretty interesting. Comment down below. Do you think the average monthly interest savings is more important, or are you one of these people that has a $0 balance, like me, and just uses the points for free? Right? I'm not spending more to use credit cards. I'm just buying things I would have bought anyway and just using the points as a bonus. Comment down below, let me know. So this is where things got a little bit interesting. So can the president do this legally? Again, I mentioned that I did a lot of research for this video, and everything is pointing towards no. The president does not have the legal authority to unilaterally cap private lending rates with an executive order. That's the job of Congress. But then if you look at this article here, this is from the American Bankers Association and other trade groups. They referred to Trump's proposal as an executive order, but immediately discouraged it. So that's kind of confusing to me. But again, if you know the actual answer, comment down below. I'm 99% certain that this is the job of Congress. So any executive order attempting it would almost certainly be challenged and struck down by courts. Also, the other interesting piece of this is that evidence shows that and we'll talk about this later, evidence shows that a 10% interest rate cap would reduce credit availability and be devastating for millions of American families and small businesses who rely on and value their credit cards, the very consumers this proposal intends to help. So comment down below, let me know what you think, okay? Do you think that this is going to be devastating, or do you think that this is going to help people? So I do want to get into a billionaire's response to President Trump on X, but he actually deleted this tweet. This is actually a screenshot that you're looking at. You can see this is an archive tweet. Basically, he was saying that it would be a huge mistake, and I do want to get into the implications of that, so stay tuned. And I'll also show you a couple other things at the end of the video and how I feel. But before that, let's get into today's sponsor, Policy Genius. One thing I've been thinking about lately is how much more expensive everything feels. Groceries, housing, and insurance all add up fast. And when you're building a life, a family, or a business, that pressure can feel overwhelming. That's why protecting what you've already built is just as important as growing it. Life insurance is one of those things that people put off because it feels complicated or stressful. And honestly, that's exactly where Policy Genius comes in. They're not an insurance company. They're a marketplace that helps you compare policies from top insurers so you can find the best coverage at the lowest price without the headache. What I like is how clear they make everything. Coverage amounts, prices, terms, no guesswork. Plus, they've got licensed agents who walk you through the entire process and handle the paperwork for you. With Policy Genius, real users have gotten 20-year, $2 million life insurance policies for just $33 a month. The new year is here, and so is your chance to take control. Give your family the gift of security today. Head to policygenius.com/whiteboardfinance or click the link in the description to compare free life insurance quotes and see how much you could save. Okay, so Bill Ackman shortly tweeted at President Trump, and again, he deleted this almost immediately. It was kind of funny, the backlash. I'm not going to show the comments that were under this tweet just because I make a living off YouTube. And I don't want to be kicked off of YouTube. So basically, he said, this is a mistake, President Trump. Without being able to charge rates adequate enough to cover losses to earn an adequate return on equity, credit card lenders will cancel cards for millions of consumers who will have to turn to loan sharks for credit at rates higher than and on terms inferior to what they previously paid. So he followed up quickly with this full tweet here after he deleted that first one they just show you. The whole gist of it was saying that inevitably it's going to cause millions of Americans to have their cards canceled. So I think this is also a good talking point for the audience, for you guys. How do you guys feel about this? So again, I mentioned earlier that banks and industry groups were saying, you know, a 10% cap is going to reduce credit availability, especially for people with lower credit scores. There's going to be fewer approvals, lower limits, yada, 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 and then you're going to lose all your rewards. So what boat are you in? Again, are you in the average savings group? Are you in the, hey, you know, credit card is kind of like a necessary evil, especially with how things are these days. And that's what I have written in my conclusion. I normally never write a conclusion. It's normally just freestyled off the top of my head. But I thought this is kind of a sensitive topic, so I wanted to talk about that. So with all that being said, let's take a look at all the market's reaction. Okay, what did Wall Street have to say? So Wall Street did react. So credit card issues like Synchrony, Capital One, American Express, they saw their stock prices fall. So at the time of this recording, Bank of America is down 1.75%. We have American Express down 4.29%. We have JP Morgan Chase down 2.1%. You know, there's just a lot of blood right now. And I know a lot of you guys watch me for like, you know, what should I invest in? And, you know, what do I need to do, Marco? And I appreciate that. I respect that. But at the end of the day, the way that I would play this is I would buy call options that are dated maybe like 3, 6, 9, 12 months from now. at a higher strike price. I don't want to get into the mechanics of how options work, but if you know what I'm talking about, all these are getting, killed right now, 2-3% down across the board, if not more, by the time this video comes out. And if this interest rate cap is a nothing burger, what do you think those stocks are going to do? They're most likely going to rebound, right? Go pull up a stock chart of Visa. It's been on a generational tear. So again, if this doesn't go through, or if this executive order gets struck down or whatever, it doesn't get approved through Congress, that's probably how I would play this. So what could happen if it did pass? Okay, so let's say a 10% cap did become law. Okay, so what then? So consumers with high APRs, they would save money, obviously. Banks would see lower interest income. To compensate, banks could reduce rewards. They could raise fees. They could tighten credit, credit scores to get approved. And then high-risk borrowers might be cut off. So all these trade-offs, they've been raised by analysts and not just banks. And I think it's easy to think capping rates sounds good, but practically markets are going to adjust, okay? When I worked at a large publicly traded bank, I was in their credit analysis department. So basically I would be checking businesses' credit worthiness on how much we could lend to them based on their books. And basically what we would do is, a lot of them, when this was like 2018-ish, when the market was going down in December of 2018 and inflation was starting to creep up, they would just pass the prices on to their customers. They would just raise prices essentially. And guess who foots the bill overall? It's you, the consumer. So just to finish it with this headline, this isn't a done deal, you guys. Okay, a Jefferies analyst is saying that it's highly unlikely going to happen. So again, this could be a good way to play some options. But again, this is not financial advice. Don't listen to me. So what's the bottom line? So this cap is headline grabbing. That's why you're probably watching this video. But right now it's just a proposal. So legally, it can't happen without Congress based on my research, and similar bills have failed before, and both banks and analysts think it's unlikely to advance in its current form. So here's my takeaway. So the reason this idea is resonating with so many people right now isn't politics, it's pressure. So people are feeling crushed by day-to-day cost of living. So groceries are expensive, insurance is up, all these things are still brutal. Look at the price of housing, okay? I don't know what my kids are going to do, 15, 20 years from now. So when money gets tight, credit cards become the easiest Band-Aid. So a 10% cap would help people who are already stuck carrying balances. Of course, 10% is going to be better than 19, 23, 27.9%, right? So there's no denying that. Lower interest means a monthly savings, which I showed you in that Vanderbilt study earlier in the video. But let's be very clear about something. Credit cards are not a solution. They're a symptom. So they're a short-term tool to smooth out your cash flow if you have too much month at the end of your money. This is not a long-term fix for affordability. And if the best outcome of this policy is that people feel more comfortable carrying balances, then we're actually moving in the wrong direction, okay? Don't use it as a crutch. If you've been watching my channel for any amount of time, you know that I have no debt. I have zero consumer debt, don't have any debt of any kind, even though I do have a Tesla payment because I got it for 1.99%. And I'm not some Tesla fanboy. My X5 actually got T-boned and totaled. So I worked with a certain amount of insurance money to get a new car, and Tesla was the best option at the time. But anyway, my point is the real goal should be the winning strategy of not needing to use credit cards at all. Okay. So if you do use them, pay them off in full every month and keep a $0 balance, okay? That's how you win this game. That's how the banks don't win. That's how usury doesn't win. So yes, a temporary cap might ease the pain, but the long-term solution is higher savings, better cash flow, and lower fixed expenses. Everything I've been teaching you since 2017 on this channel. So don't rely on debt to fight inflation. You need to invest in assets to fight inflation and to protect your PP, your big PP, your purchasing power. I'm 38 going on 17. So hopefully you got value from this video. If you want, check out Whiteboard Finance University, okay? I go live on there every Thursday. We have a lot of members in there. It's fun. It's a good discourse. There's courses. There's a million different things in there. I don't do it justice because I'm not a salesperson, but trust me, check it out. It's worth it. Thank you so much. Share the video with 12,000 friends. And as always, have a prosperous day. Or click the link in the description to compare free life insurance quotes and see how much you could save. Yeah, one taked it. Yeah, one taked it. One taked it. Oh, excuse me, Flex. Excuse me, Flex. Where's the, please tell me I got the flex bomb. Oh, here it is. Please tell me I got the flex bomb. One time. Oh, yeah, we want to take the flex. Yeah, we want. Oh. Yeah, one take the flex. Yeah, read that sponsorship. Yeah.
I mean, come on. I mean, excuse me, Flex. Excuse me, 2 minutes. We're getting 2 minutes. Let's do what we came to do. New York, we run this shit. I mean, partners, JR son.